Welcome to my channel. Today we will be talking about what makes Equitable Bank different from traditional banks. Equitable Bank, also known by its digital arm, EQ Bank, is a Canadian institution that has positioned itself as a challenger bank. This means it aims to disrupt the traditional banking model. One of the biggest differences is its digital-first approach. Unlike traditional banks with a large network of physical branches, Equitable Bank operates primarily online. This allows it to save on significant overhead costs, and it passes those savings on to its customers. These savings manifest in a few key ways. First, Equitable Bank is known for offering higher interest rates on its savings accounts and GICs compared to what you'd typically find at a big, traditional bank. Second, it has a reputation for charging fewer fees. You'll often find no monthly fees, no e-transfer fees, and even free ATM withdrawals across Canada. Another distinction is their focus on specific market segments. While traditional banks try to be a one-stop shop for everyone, Equitable Bank has carved out a niche by specializing in areas like alternative mortgages, which cater to self-employed individuals and other borrowers who might not fit the strict criteria of a major bank. It also has a strong focus on digital innovation, often being the first to adopt new technologies and partner with fintech companies to provide services like international money transfers. In essence, while a traditional bank relies on its physical presence and a broad range of products, Equitable Bank differentiates itself through its online-only model, competitive rates and fees, and a specialized, forward-thinking approach to banking. With that being said, thank you for watching. For more finance videos, kindly check my page. Please like, share, comment, and subscribe to my channel. Thank you.